to have you today on ET Now. Firstly, just wanted to understand where exactly is the business headed. Growth in interest income clearly has been muted for you this quarter. Your NII has seen a decline by about 3%. Tell us what led to this kind of a fall.
We were 60% secured as of March 24. We have turned 65% secured as of September 24. So the strategy of turning the bank into a secured bank and reaching 80% is very well on track. Now, we have a microfinance book, which as of September is 35%. There is stress in the microfinance sector. Now, because there is stress in the microfinance sector, we have been conservative in the first half. Between March 24 to September 24, our unsecured microfinance book has seen a decline of 7%. So our book has actually gone down. Now, because the book has declined, obviously our interest income is less. So that is the first big reason. I would expect a large chunk of our NIM, because it's a high-yielding book, has left us because of that. Second, because there is stress in microfinance, there is also elevated NPA, which causes interest to be suspended. So if you take a multiplication of these two factors, we have lost some NIM in unsecured microfinance, leading to lower PAT for us also than what we had anticipated.
You've taken additional provisioning during the quarter, which led to fall in profitability. Is this related to any particular segment where you are witnessing stress?
So to answer your question, we have declared a profit after tax of 267 crores after providing 115 crores of additional provision. The reason to provide additional provision was twofold. One is to make sure our net NPA remains below 1, which is a universal bank condition. I mean, at least the application of universal bank does require us to maintain that. Second, it also improves the PCR, which is now at 67.4%. And a healthy PCR tells all investors that, listen, the bank is providing in advance, so less challenge in the future because we are well provided. And I must say that the reason for increasing PCR is largely unsecured book, which is the microfinance book. We have this time also added a bit more to the PCR of the secured book, not for expecting any trouble. Our secured book is performing extremely well. We were told by a few analysts that if you increase your PCR on the secured book, you will be literally in the same range as some of the peer group that they have seen. So we decided that we'll take the PCR of the secured book to 30%. It was closer to 18% last time. Our PCR for the bank's unsecured book is 88%. Our PCR of our BC book is upwards of 90%. So we are very well provided for the stress which has already occurred. And I do think, given that we have seen the peak of our MFI stress in the first half of this year, we would not need so much, if at all any, additional provision in the second half. But what our viewers should expect, our net NPA will remain 1%. That will be our base condition.
Right, and your GNPAs are near 3% levels now. That's an uptick of 35 basis points sequentially. Can you explain what led to this uptick in the quarter?
So, secured is a regular flow you should have, right? Which means if you are doing a business, it is normal to have some NPA. Fortunately, if you see the loan to values of the secured book, even in the NPA book, it's around the 50s, which means there is no LGD, which is loss given default. So I must give comfort to both you and the viewers that there is nothing in the secured book which is challenged. In fact, I did receive feedback from analysts which I held the call yesterday, that they saw our secured book performance pretty much being healthier than the industry that of a similar nature, which is affordable housing, micro lab, MSME. But yes, it's the nature of the beast, which is you will do business and the business will result in NPA once as customers go through some tough times, either in their businesses or their personal lives. But given that there is property collateral, you will certainly recover that money. So the primary increase in gross NPA is largely true with unsecured business. And within the unsecured business, the primary increase is from the BC-led microfinance book. It is not the bank-led book. And in the BC-led book, we have service guarantees on collections from the BCs. So our credit cost, hence, if you see, is at 1.86 for the first half, which is lower than last year. And we would expect it to get even lower in the second half. So one of the things that we did want to do was to have credit cost in the 1.7 range for this year. We are making full attempt to get to that 1.7 range. In the first half, at 1.86, it is lower than same time last year.
Right. Also, Ajay, your business correspondent book as a percentage of your advances has seen a rise of, from 2.1% to 10% now. It's come down to now 7.4%. Do you think we'll see the number going down again from the current levels?
Absolutely. So I think, which is why I said, in the unsecured microfinance business, first is if you see the BC book, the total book is growing negatively, which means everybody in the BCs are focusing on collections. Now, there are two parts to it. One, if you're focusing on collections, then your business is falling. And NPA it's a denominator and numerator game, right? So if your denominator keeps shrinking, even though your numerator may not be large, it will always show as much more than it should ideally show. So remember, our BC book has fallen 20%. It was 2,500 crores plus in March. It is 1,900 crores in September. So 20% is a drop in denominator. So that's rule number one. Second, in the MFI unsecured book, if you're not a good customer, it doesn't take long to become an NPA. It really flows quite fast. So I think the worst of the BC book is already behind us. I think it is already visible to all of us. Because they have a service guarantee, the bank will see elevated gross NPA, which is why it has gone up to 2.86. But it will not see a high NPA because we will claw back from the service guarantee. Which is why gross NPA is higher because it reflects the BC book. But net NPA is at 0.98 because the service guarantee has already been encashed and hence net NPA has come down. And because of that, the bank's credit cost is also lower than last year. So it was a strategy for us to de-risk ourselves, to make sure we have localized BC supporting a MFI business. And I must say, in this time of stress, that has worked out very well.
Of your guidance, do you think there is a risk to your guidance because of the rejig? What is there in terms of the unsecured book?
So a few things. One is our asset growth of 20%. I do think we will meet it. And it will meet in a shape that we would like, which is higher percentage of secured versus unsecured. So that is very important because we can still grow unsecured and we can grow it very fast, but that will not make the future bright. Not our strategy. So one is asset we will meet, deposit growth, we will do 20% and more. So that is also given. Yes, given elevated credit cost, will be on the lower end of our guidance. Possibility is certainly there. But I think most important for us is not about this quarter or next quarter. It is to make sure that we do the right strategy. So in the regular term, because the stress of my MFI is given, how best we address it. And we don't take any short-term shortcuts. Because to improve our current profitability to something, we will regret it next year. So our bias really is that we still are in good shape. We have two more quarters, another half to go. Second half is always better than first half. In our case, will be even more better because we obviously have taken the big challenge in terms of credit cost and seeing the slippage in the MFI book in the first half. So yes, we would still like to fight back on the guidance.
All right. Thank you for joining in and running us through.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.